Welcome back to Under 30 Time. SoFi on our minds here ahead of earnings next week, early next week. I believe they're Monday. George Tsilis is here for more, senior markets correspondent for the Schwab Network. George, close out the show with a fan favorite. I feel like it's been like a weekly appearance lately, and then I look at the chart and I'm reminded why. This stock's gone 3x in a short amount of time.
It has. We've talked about this one over the past at least couple of years, but I talked about some of the great things about the business in terms of the expansion and personal loans and credit cards and, of course, financial services and all the loan growth aspects. And we also talked about the securitization elements. So it looks like SoFi's partnering with a lot of major institutional banks in terms of securitizing loans, and that allows SoFi to basically monetize loan growth rather quickly. So the aspects of the business have always been a challenge in terms of what's going on with the equity base, and the equity base was always quite large, and they continue to issue shares over time. We talked about how this was a longer-term strategy, and you back up to September, actually late October, and you can actually see a big takeoff in the shares, and that's a suggestive move because we're seeing the yield curve widen out, but at the same time, the aspects of the earnings per share continue to improve on a forward basis. So if you look at the estimates for earnings of SoFi, it's still expected to be quite low, relatively speaking, at around 4 cents, but that's a pretty significant improvement compared to 2 cents they earned last year. So that's a double. If you look at the sales growth at around 682 million, that's about 18% higher than the previous year, around 580 million. Now, if you do consider this number at 4 cents, it's very low in terms of dollars and cents, but it's all about the ratios. The company is expected to earn for this full year 13 cents. So you can see as we move closer towards the end of this fiscal year, which they're going to conclude when they next report, the bulk of those earnings are essentially loaded into those last two quarters. Going forward into 2025, the earnings are going from 13 cents to 29 cents. So they're expected to grow their earnings another 125% next year relative to this year. And for what it's worth, we can see that the stock price is moving first, but the trajectory of earnings is improving. And so when looking at this, obviously they're going to be talking about their guidance, their securitization partners, the loan growth, the risk assessment of their business. But, their growth in terms of sales expected on a forward basis is around 25%. And we're talking now EBITDA, which is growing at around 80 to 90% right now. So with that said, this quarter is not necessarily a pivotal quarter. I think that happened at least when you look back at the company in the Q3 of this year. The trajectory of earnings is going to be important because that's what the price is moving on first. So it'll be, of course, a volatile play going into earnings, but there is market improvement in the business just from a financial standpoint, which I think is reflected in the price.
Okay, so speaking of price, I did notice that RSI now approaching almost 68, so nearing now overbought territory. Yeah. I mean, long term, technically speaking, signs everything is pointing to more positive momentum, but the concern I think now is with earnings so imminent, will we see any degree of pullback just based on the fact that we are pretty much in now overbought territory?
Well, I mean, that's possible. You have to consider that risk. So I think it's important to do so, Jenny, because, they're always going to be looking to shore up their abilities to have cash on hand. And I think they'll maybe take an opportunity to do that. And it's not a bad thing. I mean, they have been doing it as a business for years now. And this last year, they became profitable on a net income basis, and they hadn't been since 2017. So we're seeing a big, major trend reversal in the shares, but nonetheless, the numbers themselves in terms of dollars and cents are quite low. So therefore, they may take an opportunity to issue some additional shares, considering that now the dilution risk is still there, but it's not as bad as it was previous to the last couple of quarters.
Good stuff. George Tsilis, appreciate it. Looking forward to these earnings, as I'm sure many of our viewers are as well. Really nice performer as of late, looking to build on that success when we hear from them. Again, that's George Tsilis, senior markets correspondent for the Schwab.